Well, happy Monday. It's September 30th. We are heading into the fourth quarter. October starts this week. Want to bring you the latest data here in the Austin metro area. We're going to start looking at August data. So that's the last full month that we have, and probably one of the last months we're going to have that is pre-Fed decision. So it'll show you what buyers were doing before rates were coming down. Then we're going to look at mortgage rates. We're going to see where they are right now, what's been happening since the Fed made their decision. And finally, are lowering interest rates having any impact on the market? So let's start with August data. So this is a look at, again, August for the 5-county metro area on this chart. This is number of home sales. 2024 is the orange line. Light blue is 2023. Darker blue is 2022. We're not far off. We're a little below where we were the last 2 years. The pandemic are obviously the higher bars there, but we're a little lower than we were the past few years, about 2,700 home sales in August. This is sales volume. If you added up the dollar amount, again, lower than any of the last 5 years. Median sales price, again, we're probably down about 5% off last year. The engine is trying to get going and it just can't quite get going. It's staying fairly stagnant, at least through August of 2024. Our median home price is a little lower. Average is identical. So if you took the average of at least 2023 and 2024, it's pretty much the same in the market. This was 2022, and that's really where we've come down from. This was peak, low interest rates. This is where it peaked out. We're now sitting around 575 as an average price in the market. Total listings finally starting to come down a little bit. You can see that we peaked out again, probably May, June this year. And it's just ever so trickling back, but we're still much higher than we were the last 2 years. And months of inventory, again, just starting to trickle back. I'll show you that in some more updated charts with inventory as we head into October. All right, this is going to be Williamson County to the north. So this is Round Rock, Leander, Georgetown, all the major suburbs in Williamson County. Again, home sales down a little bit, sales volume down. Median sales price down a little, not terrible, but again, we've kind of found this level with the higher rates. We'll call it the low to mid fours range. And so right now they're sitting around 425 for a median price in Williamson County. Average sales price. This is actually neck and neck. The dark red line is 2021. And look at that. After all the homes price, look at where they spiked up super fast. From, call it 360 up to 490, they've pretty much hovered there. So we're sitting around 487 3 years later in the same spot. Total listings still going up in Williamson County, and at least through August. And so, they haven't quite peaked yet. And we can see the last 2 years, they really peaked out late in the fall. And that's sluggish sales. Typically, they should peak out in the summer. If they peak out later in the year, that's because sales are tepid and those homes are having to sit on the market longer before they finally start coming off the market. So that's what's happening in Williamson County. And again, months of inventory still going up. So this is Travis County. This is going to be Austin, Pflugerville, Lago Vista, Lakeway, Bee Cave, all those areas, way down in terms of number of sales, just anemically low. Not even 1,200 sales in August. And this is the core metro area. So very, very low. Look at that. We were over 2,200 peak in 2020. Sales volume, again, that's dollar amount lower than normal. Median sales price neck and neck with 2021, 2023, 2024, pretty much identical to the same price. Average sales price went up a little bit. And that's okay. But I think it all still bakes out to being pretty even with the last 3 years. Total listings is coming down. So we're not seeing as many listings hit the market, and we are already peaking out. We peaked out in June. And months of inventory, again, starting to come down a little bit. This is Hays County. It's got a little bit different story. This is to the south. So this is going to be Buda, Kyle, San Marcos, Dripping Springs. I think a lot of it is going to be driven off Buda and Kyle. Number of home sales is up. In fact, it's equivalent to what we saw in 2020 in the fall. which is a lot of home sales. Sales volume is up. Again, dollar amount of all the sales is up. Median sales price is down. Why is that? I think it's because there's so much new construction that these are the builders getting all those new properties sold. And of course, the resale sellers have to discount their price to compete with all the new construction down there. So if you are a seller and you are in Hays County, let's say you're in Kyle and you're in one of these newer neighborhoods and you still have lots of new builds around you. Well, how are you going to compete with them? You got to be a better price. And so that is the lowering of the price. And of course, the builders are building lots of affordable homes down there where there's even new builds below 300,000 right now. So I think that's what's bringing the median price down is all the new builds, especially in Kyle. Average sales price, again, coming down. Total listings just now starting to peak out. Looks like they peaked out in July, but again, just now starting to peak out. Months of inventory, again, just now starting to drop. So where are we now? That's August, which means those were July buyers closing in August. But where are the August buyers right now closing in September, which is what we're wrapping up? And what are September buyers looking at as we move forward? So let's talk about rates. So this is today's rate. We're at 6.2. And y'all may remember we were actually a little lower when the Fed made their announcement. So what is going on? By the way, that is still a great rate compared to where we were the last several months. This is the 10-year Treasury yield here on this chart. Okay, and you can see where we were back in June. We were way up on the 10-year Treasury at 4.6%, and it's come all the way down in between 3.6 and 3.8%. But what happened when the Fed made their announcement? The Treasury went up a little bit, and the mortgage market reacts to treasuries. Treasuries, especially the 10-year Treasury, is what we call a long-term investment, 10 years. Okay, the Fed rate is for short-term investments, in immediate trading. So short-term trading, we're talking about your credit cards, we're talking about those things are going to be more impacted by the Fed rate. The Treasury right here, the 10-year Treasury is what impacts the long-term lending because your mortgage is typically how long? 15 or 30 years. So it's going to react more to long-term. But it went up a little bit. But again, you got to look at the long-term trend. For 4 months or so, we've had a full basis point pretty much shaved off the 10-year Treasury. That's why rates have come down since May. And again, here's 30-year fixed rate mortgage mirroring that chart. And at this very end, you can see it go up a little bit. That's okay. We're still below 6.25, which is great. So what's happening in the refi market with lowering rates? Boom. So this chart is June of last year, June of this year, and then boom, as rates came down, refis have just shot up. They're up like I think 170 or 180%. So they're flying off the chart. But what's it doing with buyers? So we're going to go over here in housing data, and we're going to look at mortgage applications. So mortgage applications is a reflection of, well, week to week, year over year, how many buyers are now applying for mortgages compared to refinancing. We can see it right here. So week over week, purchase is up like 1.4%. It's almost unnoticeable. There's not that many more buyers coming out to the market. And year over year, we're up 2.35%. Again, barely a blip, but refinancing is up 175%. So what's happening is all the people over the last 2 years, including myself, who bought at higher interest rates are now able to refinance down. So those are the excited people right now, people who had locked in higher mortgage rates. But buyers who either don't own a home or maybe they already own a home that has a 2, 3, or 4% interest rate, they're not as excited to still pay 6. So that's really the biggest change is, yes, rates are way better than they've been for almost, over 2 years at this point, but they're not yet exciting enough for the people that are expecting 4s and 5s. And I think that's what we're seeing in the market right now. So here's where we stand. This is original price versus sold price. We are on the last day of September right now, heading into October. So this chart's kind of as close as we're going to get, but we peaked out on list prices. List prices is the green. Around 430, you can see people have been lowering their list prices. We're sitting in the market on the average list price around 475. For September so far, we've been closing at 425. So this is sold median price in the market. This is not a per property. They're not all, and not every property is going to look like this, but just if you take the whole of the market, we were closing around 455 in April, and now we're around 425. So even though rates are coming down, prices haven't quite yet stabilized. We're still seeing some discounting. We're still seeing a slow market. And here's why. So this is active versus sold listings in the market. How many listings? This is just single family. So I'm not including, all the other product types, duplexes, quadplexes, land, condos, townhomes, all the other stuff. This is just single family homes. But you can see we typically will lose inventory through the fall. It kind of bottoms out as we turn the corner into the new year. And then we get all the new sellers for 2025 next year coming out in the spring, and we'll see it go up. It'll look like this next spring as well. But we're peaking out. We peaked out on inventory probably in June or July. We were sitting around 13,700 single family homes in July. We've come down some, but we're still at 12,800. We're still a lot. If I go back to October of last year, we were about 11,300 homes. So we're 1,500 more homes on the market than we saw last year. Last October, we closed almost 2,500 home sales, 2,458. Right now in September, this number will go up, but we're at 1,800. We are low. And in last month, we closed 2,700. So we'll have to see if by the time we get through October, are we going to have 2,400 home sales? If we do, I think we'll start to see the market stabilize because that's pretty equivalent to last year. But if we don't, that means we have more inventory on the market than we had last year and typically slower sales. So if you are a buyer right now, I'm telling you, I think your window is right now because you've got a lot of inventory still in the market. You don't have a lot of competition. The buyers haven't yet reacted to lower rates, and I don't expect they will this year. I think we're getting pretty late in the year. I don't think we're going to feel this blip of a lot of buyers in October, November. We might feel a little bit in October, mostly because the weather is good and you're always going to get this little group that wants to buy before the end of the year, but it's not going to be a swell. I think that doesn't happen until next year. And I'm not sure how big that swell is, but I typically know we're going to feel it more in the spring. So I think if you're a buyer right now, take advantage of the lowering rates and higher inventory and less competition. If you're a seller right now, you just heard what I told buyers. And so I think it's really imperative that we make sure we're at a competitive price. We're watching the market. We know how much inventory that we're competing against, and we're going to have some patience. I myself am selling a property that we own right now. It's nice. It's fully remodeled. We've been on the market a few weeks. I think we've had 5 showings. And so far, no buyers, but we're going to keep pushing. We're going to keep doing our open houses. We're going to keep marketing that property. So you got to have a little patience in the market and just try to figure out where that price is that buyers are going to be interested to pull the trigger. Anyways, I hope this data is helpful. If you want to follow this information each and every week, make sure to go to our YouTube channel at Ryan Kelly Group. You can click that subscribe button and follow us there. And of course, if you know somebody looking to buy, sell, or invest in Austin, especially now as we're going into the last 3 months of the year, we'd love the opportunity to chat with you. Hey, I will tell you, October and November, and I've said this to clients all week, are my favorite 2 months of the year in Austin. The weather is the best. It's dry right now. Humidity is low. The temperatures are getting better. There's a reason that Formula One, football, ACL Fest, all that stuff happens in October because they know it's our best months of the year. So if you're coming to visit Austin, now would be a great time to do it. Anyways, hope you guys have a great week. Enjoy the beginning of October, and we'll talk to you next Monday. Thanks.